Hello guys, welcome back to a new video. And this one I'm going to share with you something that if you apply to your charts, it will tremendously boost your win rate and it will make you avoid unnecessary losses, a lot of losses, and it will let you determine the real change in structure or change in trend or change in the order flow. All right, this is something very few people knows about it. All right, and it is kind of an advanced, but I will simplify to you in this video. All credit goes to a fellow trader. I learned this from him, Andres Osorio. I'm gonna leave the link to his Discord in the description. It is 100% free and the knowledge there is absolutely insane. All right, he's very knowledgeable about DTFX concepts and the markets in general. So go and check it out after watching this video. So the thing that we're going to discuss here is the fractal violation or the SNDR violation versus the violation of a protected low or a protected high. I know that seems kind of confusing, but it will all make sense at the end. All right, so let me give you an example right here. Let's say that we have a bearish point of interest in here. This bearish point of interest can be anything. If you are an ICT trader, it can be a breaker block, order block, it can be an imbalance. For me, it is a swing point, it could be an SNDR, right? So we have a bearish point of interest in here. And price is trading toward that zone. It is creating higher highs and higher lows, right? I'm gonna talk very slowly for you to understand, guys. We have something like this. So what do you see in this structure right here? So the first thing you want to do is to mark out the highs and the lows, all right? The valid highs and the valid lows. It is an important step to confirm the flip or the market structure shift. The market structure shift is simply this one, this pattern right here. I know that most of you know this pattern, but I also know that most of you will get something like this. Will get faked out right here, all right? But we're gonna fix this today. So let's first of all mark up the highs and the lows. We have this low, and then we have this high, and then we have this low. This is low. This low is only valid if we put in a new high, and we do here. And then we have this low, not this one, right? This is an intermediate structure. This low didn't put in a new high, so technically this is only one leg to the downside into the previous swing point, and then put in a new high, and then put in a low, and then put in a high. So this is valid. This is the last protected low. And if you want to look for a valid market structure shift, you want price to take down and close below the last protected low, this one right here that created the high, and we do have that here. So this is a violation of a protected low, and this is a market structure break, all right, a market structure shift. But here, what happens most of the time, price will do this. It will violate this whole market structure shift is now like fake, and it continue higher. I know that I did a video about fake market structure shifts previously in my channel, but this one is very, very different. So pay attention. So after we outlined the highs and the lows, let's now outline the swing points. So we have this swing point. So let's use another one. We have this swing point. Price traded into the 50% of it and they continue higher. We have another swing point right here. Price trade to it to the 50%. It doesn't necessarily mean that every time it will go to the 50%. Sometimes it will go all the way to the 70, sometimes to 30%, all right? So it doesn't matter. And then we have another swing point right here. I'm sorry, not this one, but this one. And price violated that swing point, right? And also breaking the protected low. Now, inside this swing point, the second swing point, we have an SNDR or the origin. So what is the difference between an SNDR and the origin? The SNDR is something very, very simple, guys. I get a lot of questions about it in my comment section. It is this move right here. So let's say that we have something like this. So this move, right, is the one responsible for breaking this. It is the one responsible for breaking structure. Let me give you another example. We have this. Now, where is the swing point? This is the swing point. From here all the way to here. Now, where is the SNDR in this case? Not this one, but this one. This is the last move that created this up move. This is the last down move that created this up move that caused the break of structure. This will become the origin of the move. This is a very important area as well. This is called the origin of the move. If price wants to continue higher and it failed to trade or continue higher from the SNDR, it will continue higher from the origin of the move, all right? So in this case, the origin is the same. In this case, the SNDR and the origin is the same or are the same. Price broke this protected low, but it continued higher. So why this happened, guys? Why do you think this happened? So the concept that gonna help you to avoid this and identify the real market structure shifts and the real change in the order flow is the double bottom and the double top scenario. Now, if you are an ICT trader as well, I know that you noticed this pattern. It happens all the time. When I was an ICT trader, I used to trade with it. So basically, let's say that you have an expansion leg, you have a retracement, you have another expansion leg, right? Price is now retracing, put in this low, started trading higher. So maybe you pulled out your fib and entered from the 50% of this move or the 50% of this swing point, it doesn't matter. And price creating a new high and one more time sweeping the low and continue higher. So this is the concept of the double bottom. It is simply a sweep, put in a high or put in a low, right? Start shading higher and then one more time sweeping the lows and continue higher. The real move happens after sweeping the first top. So this is the bottom and this is the double bottom, all right? And this is the swing point. So this pattern right here happened inside the swing point. Now, what most people don't know is that this pattern right here, the double top or the double bottom, can also happen inside fractals or inside SNDRs. So in this example right here, what it seems that this is a break of structure, it is only a double bottom scenario in this SNDR. So this is the first bottom, right? This is the first top into the SNDR, price trading higher, and then one more time tapping into it, sweeping this low, all right, and then continue higher. So we have a double bottom scenario in the SNDR. This SNDR or this fractal is the one that put in a new high. It's the one responsible for putting a new high, right? From here, all right? Not this, but this zone is the one that put in a new high, this one right here. So after price started trading lower, it found rejection from this SNDR, right? So that retracement that you are looking for to enter, that you are looking for to enter from here and then continue lower, price stopped at the SNDR, that created a new high from here. So this is very important. And then price started retracing. So that tells you that price is still bullish, right? Because the area that put in a new high is still rejecting price. Price couldn't break below it. Even if we have a wick right here, so price closed below that protected low, all right? So this is done, right? We have that closure below the protected low, but price is unable to close below the SNDR. So here we have only wicks right here. This tells you that price is still facing support from this zone right here. So what you want to do is you want to wait for price to close below it. Closing below this closing below this SNDR is far, far more important than closing below this protected low right here. So this also can happen on the origin of the move, right? It can also happen with a fractal. Let me show you an example. And of course, I'm going to show you real chart examples later on. So this also can happen. And here we have a small fractal in the candles itself. Again, I'm going to show you how that looks like. Price traded higher. So this whole leg is one expansion. And then we have a pullback, topping into this fractal, creating a new high, and then breaking below this low, but still couldn't close below this zone, the previous zone that put in a new high, that pushed price rejected from to put a new high. We're still facing support from it. It is still rejecting price. So for me, this is not a valid market structure shift, and this could be potential double bottom scenario inside this zone right here. Now let's transition into live chart examples, and you will understand clearly what do I mean by this. All right, so this is the first example, and I shared this in my Twitter account beforehand when price was here, I believe. So anyway, as you can see, we have put in this low and then this high, right? And then we have put in this low. Let me zoom in, and excuse me for a second. So we have this low, and then we have this high, and then we have this low, and then we have this high. So pay attention. Price returned back into the previous zone, this one right here, this one, and then rejected heavily from and put in this low right here, right? So what is the last protected low? This one right here. The last protected high is this one. So technically, if we broke above this one, if we close above this one, then this is a market structure break, and we have that here. So if we have a market structure break here, and what happens, of course, you want to take your entry once price retraces back into this zone. This zone right here. But what happened is that price traded below this one. So why this happened? By simply using the double top, double bottom scenario or concept. As you can see, the area that pushed price lower in the past, which is this one, it is still offering rejection. Price is still unable to close above it, right? So what happened is that we have continuation to the downside. As I said, breaking the area that sent price lower is far more important than breaking the protected high. So in this case, this is the top, right? This is the first top, and this is the double top. and price continue lower. On here, what happens is that, as you can see, we still didn't break above this zone. This zone is still offering rejection. We have only weak side here. When you're gonna look for buying opportunities is when we break above it, and we do have that here. So what happens next is that price traded all the way back into this whole range, the previous zone, sweeping this low, right, and then continue higher. And this is a trade I took, as you can see here. So I was waiting for that zone that pushed price lower in the past. I was waiting for it to get broken to avoid the double top scenario. Let me give you another example. Alright, so this is a beautiful example, and this one is kind of an advanced one because it doesn't show up clearly in the chart. So let's zoom in for this one. As you can see, after price we have this low, of course, and then we have this high. This is a valid high. It put in a new low, and then we have a valid pullback into here, and then put in a new low. So if you look closely, price rejected from this fractal right here. From this low of the candle to this high of the candle, this is a fractal. A fractal in the higher time frame. So this fractal, if you go to, so this is the 1 minute time frame. If we go to a time frame like the 1 minute, the 1 second or the 5 second, it will look like this. Not like this. This is a bullish example. So it will look like this, right? So this is 5 second structure is the same as this one on the 1 minute when you go to the higher time frame. So this fractal right here, it is the one that is responsible for pushing price lower and creating a new low. Price after it started trading higher, taps into it here, and then fails to break above it. So this is the last high, guys. Technically, if we broke above this high, this is a market break. But remember the double bottom or the double top scenario. Price traded all the way to here, sweeps liquidity from here, and fails to close above this fractal. One more time, trading all the way to here and fails to close above this one right here. So this is a market break, but it is low probability because we can easily trade lower, just like we saw in the previous example. But this one, it happened that price wants to go higher, right? So we have that break of structure right here. We finally closed above that fractal that pushed price lower in the past, right here. And after that, what happened is that price came back to the zone, right? So as you can see, price came back to the previous range. We have a double top. Also, we have a double bottom scenario right here. As you can see, put in this low, start trending higher. One more time, sweeping this. So this is a double bottom. This is the bottom. This is the double bottom, and then price continue higher. Also, we have another example right here. This is the SNDR. Although this doesn't put a new low, but if you go to lower time frames, price did put in a new low right here with the body closure, and this will look like a market shift, right, in time frames like the 5 second. But the SNDR is still pushing price to the downside. This zone is still pushing price to the downside. So this is only a double top scenario, sweeping the high and then continuing lower. So I'm not expecting you to understand this and digest this by just watching this video and then going into live markets and apply this directly. You'll have to practice and backtest this, go back to your charts, and you need to train your eyes see it first in hindsight in order for you to identify it in live printing markets. All right. Again, if you have any questions, please DM me in my Twitter account or leave a comment down below and I will answer you as soon as I can. Now, happy trading and good luck.